Hello everybody and welcome to Project Trade. It is the Trading Highlights Show and we are looking to give a go at a technical trading strategy. And it is the infamous Awesome Mackerel strategy. You know the one. I probably don't need to explain it, but I better had to just in case. Two indicators shall dictate our entry signals. First in, we've got the Awesome Oscillator. It's a histogram with a zero line crossover that looks like this. We have made a judgment call decision to use the default settings of the indicator. So the indicator subtracts a 34-period simple moving average from a 5-period simple moving average. It uses the median price, that's the high plus low of the period, divided by 2, and the histogram then prints out the value, which is also the distance between those two moving averages. A fairly simplistic formula. Our second indicator will be the moving average convergence divergence indicator, that's the MACD. But here comes the profit. We're only going to be using the MACD line. Let's check out the MACD in full here, and what we're going to do is strip all of this back, and instead it will just be that blue line there. That is our MACD line. Again, we're going to be using the default inputs. This time it's calculated by taking a 26-period exponential moving average from a 12-period exponential moving average. Lots of moving averages being subtracted from other moving averages in this strategy. That's all the basic understanding of the indicators we need though. If you do want to learn more about either of them, we have done videos and they will be linked in the description. Moving in though, how are we actually going to use these indicators to get us onto the trades? Well, with the Awesome Oscillator, when the histogram bars are closed above 0, then we are only going to take buy signals, and when the histogram bars are closed below 0, then we're only going to take sell signals. This will hopefully help filter out a few of those bad trades, and you never know, maybe one or two of the good trades as well. Then for our MACD line, we are just going to take that simple zero line crossover as our entry signal. So when the MACD line closes above 0, we'll enter a buy trade, and when it closes below 0, we'll enter a sell trade. There will not be any candles for one indicator to catch up to the other for the entry signal. When the MACD line crosses the 0 line, it is then or never for the trade. If the AO doesn't give the signal to go ahead, then we are out of it. Let's head to the money management because we are not going to run it on gut instinct, even though obviously I do feel that my gut instinct is really good, at least 49% of the time. Instead, we will get some help from the standard deviation indicator. What we will do is we will use the value that the standard deviation indicator gives us as a risk marker for our trades for both our stop loss and our take profit triggers. Here's what that standard deviation indicator looks like. It's a single line oscillator which is calculated by measuring the dispersion of price against a moving average within a given set of data. Basically, what are the size of the latest price moves? I won't go into any further detail now on how it's calculated, but there is a video on the indicator in the description if you want that more in-depth approach to it. For the purposes of our strategy, it's enough to know that we are going to be using the default 14-period input on a simple moving average for it, and you can see in the top left corner of the oscillator where it gives its value. Just so you've got an idea, here's a quick example of what the distance looks like with a 1.5 times standard deviation value used for both the stop loss and the take profit. Because it's 1.5 times standard deviation, we will multiply that figure of 0.829 by 1.5, which gives us a rounded figure of 1.24. With our entry price being at 1,763.15, it means our stop loss will be at 1,761.91 and our take profit at 1,764.39. So there is a bit of room either way for the trade without trying to allow it too much to get away from us. For this particular strategy, we are going to want to give our trades some flexibility. So we're going to split each trade into two sub-trades. So we'll set sub-trade A stop loss and take profit at 3 times the standard deviation value. And sub-trade B, we are also going to use a 3 times standard deviation stop loss, but it will be a trailing stop loss. Each of those sub-trades will then be loaded with a 0.5% capital risk, meaning that we have a 1% total capital risk on every trade we take. Another exit trick that we are going to use is that if the MACD line recrosses that 0 and closes, then we will exit our trade. And we'll do the same if the Awesome Oscillator closes across 0 too. So hopefully all these rules can keep our funds from evaporating entirely across the course of this strategy. Final bits then, we are actually going to use these indicators on different time frames. We'll be using the Awesome Oscillator on the 1 hour chart so we can get a longer feel of the flow of the market, but our MACD entry signals, they will be a bit faster paced on the 5-minute time frame. We are crossing our fingers that using that speedier time frame means that we'll be able to get at least a couple entry signals from each session we trade. And we're going to be playing this one on the gold chart, doing it for all those Peter Shilton fanboys out there. Those gloves were absolutely as good as gold. Gold for us is paired against the US US dollar, and it is represented with its element symbol AU. They then just stick an X in front of the AU part, so it's got 3 letters like the other currency pairs. Why an X? Probably because it's the coolest letter. Why else? Every trade here will be journaled so that we get a fair and accurate picture of the situation. Don't want to be trading a bad strategy for an entire lifetime just because you haven't actually been noticing it without logging it in a journal. I have heard a lot over the decades about the Awesome Mackerel strategy, and now it is finally time for us to give it our shot, to stand up and be counted for, and to put ourselves out there and into trading history. Let's give it a go. Here we are then, 2 gold charts pulled up. It's just about 9:45 in the morning now. On the left hand side, we've got the 1 hour gold chart, which has got our awesome oscillator pulled up. That's showing a value above 0 at the moment, so it'll be buy signals only over on our 5-minute chart here with the MACD line pulled up. That MACD line is quite a way above the 0 line already, so at the moment we either need that to come down and as well get that awesome oscillator across. Seems unlikely as it's an hour long, but it is pretty close in terms of momentum to getting across. It's not way out like over here or something. But I think the more likely is if price comes down like it is right now, that MACD line heads down, gets across the 0, and then recrosses above. It can come down to here, bounce off a sort of support area, and then we could get back in on a buy trade with the recross. Certainly this candle looks promising right now for that. Let's check out the economic calendar, see what's going on around the world. Okay, so what have we had already? A few bits coming from Australia this morning. That big one, the house price index there, they've put it in green, so it must be a good thing. Yes, they've beat their expectations of a 4% quarterly increase in house prices, and they've actually got 6.7. Yeah, that's what a good thing that is. 5.4% previous quarter. Wow. What else we got? Registered unemployment rate in Sweden, 7.7% against 8.1 actual. Industrial production in Japan came out at 730 month on month. That was minus 1.5, and it was expected minus 1.5 with a previous of minus 1.5. Great consistency there. Although Japan, pretty industrial country, wouldn't want this to slip for too long, I'd imagine. 9 o'clock employment numbers coming out of the Great British Pound, which don't look too bad for them. Yes, the year-on-year average weekly earnings is down a little bit, 8.8 previous, 8.3 actual, but otherwise these don't look too bad. Unemployment rate 4.6% against a forecast of 4.7. Claimant count for unemployment benefits, they thought that was going to go up by 55,000 people, but it's dropped by 58,000 people. On the whole, pretty good jobs numbers for them. They won't be too disappointed with that. 9:30 in India, the wholesale price index year-on-year, 11.39%, even higher than the forecast of 10.59. Inflation over there has been rapid. But yeah, that was the Swiss PPI month on month there that had 0.7% against the forecast of 0.3. Not ideal for the producers there. When they see regular price increases like that, you often see that pass down the line to the consumer price index. Plenty still to come for us though. Not sure if too much of this is going to have an impact in the morning. CPI coming out 10 o'clock from Spain and 10:30 from Sweden. Neither of those going to have a roll-on effect, but it's inflation, it's the hot topic. Spain's expecting 0.4, Sweden expecting deflationary environment on their standard CPI, negative 0.2. I'd say that's optimistic. I bet they're going to get 0.3, 0.4. 3 o'clock services volume month on month in Brazil, might check out that. 3:30 from Canada, manufacturing sales month on month. That'll be something that we'll just happen to see because we are focused on this one right here. That is the CPI month on month coming out for the United States dollar, and they're expecting it coming in a little bit hot, 0.4%. No surprise there. Will it be more though? Will it come in even greater than that? They had 0.5% previous. If it's up at like a 0.7, 0.8, people aren't going to be happy, even if most of that ends up in used car sales and wedding dresses and things like that. It's still not ideal to see, but obviously that's the one to watch, and that one could have a genuine impact on the gold US dollar. Should see an increase in volatility and volume. Let's get back onto our charts. And as we said, price needs to come down, get that MACD line across the 0, and then have a reversal. Back up above it comes, and then in we are. Let's just wait for our next signal and for some of these economic numbers to come. And there is our first set of CPI numbers coming on the euro from Spain. And what do you know? A little bit more than expected, 0.5% actual against the 0.4 forecast. I think they would have wanted it to be a little bit under the 0.4, but nevertheless, they'll be happy they didn't spiral out of control with something like a 0.8. Now we'll wait for Sweden's at 10:30 to come through. Yep, and check the optimism from Sweden where they had that deflationary environment, negative 0.2 predicted, but it has come in at 0.5% month on month. I mean, how wrong can you be in a forecast? 0.7% out on a month on month. Year on year, they got 2.1 against 1.5. And it's another inflation number coming in higher than expected then. This one by quite a bit. But let's see here. This price comes back down. I wonder if that is purely because of this bit of divergence on the MACD line here. You can see the price at its peak there. And then when price makes a new peak, actually this MACD line has come down a little bit there. Could be seeing a bit of divergence there where this reverse and price comes. Let's get it towards that zero line. And after a few big sell-off periods here, 11:15, we have got a zero line crossover on the MACD. Can't take it obviously because that awesome oscillator is still above zero here, so it only buys signals for us. Does mean though we can now wait for that price to bounce from this level, hopefully come back up, don't continue this downward trend, come back up, and then get across the zero and give us a buy trade which we can ride all the way up to this resistance level again. That's my prediction. Let's see what happens. Price continuing to come down though. We are seeing a few more red candles appear here, and that's pushing the MACD line lower, getting us further from that signal. As we've come over the hour a couple minutes ago, you can't really see it. Let's try and zoom in and see if we can. You can't see it, but the awesome oscillator, it is showing a value now on the hourly chart, just ever so slightly below 0.007 there. Barely noticeable, but if it closes like that, that means we are then only in for sell signals, no buy signals. There is our confirmation then on the hourly chart from the awesome oscillator that it has closed below zero. That means on the MACD line, sell signals only now. Can't jump in on this trend though. Got to wait for an actual crossover to happen, so we need to come back up and then below. A bit of an awkward position for us at the moment. If we had been on this sell trade, you'd probably get in around about here. That would be going quite nicely so far. Possibly would have taken profit. But yeah, as is, the wait continues. Alright, another hour on. Not really any closer to a signal here. MACD line is starting to come back up as we see a nice green candle here. But we have seen those before on this run. And the downtrend has continued. This has really been all red this morning. You can see on the hourly chart. 1, 2, 3, 4, 5. If this one goes red, we'll have had 6 straight red hours. A couple of them pretty big there. We'll keep waiting for that signal and waiting for that US inflation at 3:30 as well, getting closer now. We had been seeing that MACD line come back up towards the zero, but now as you can see, last candle, very sharply red, and the same with this one now, it just keeps dropping, and so this MACD line is going to run away for a while now from that zero line, and we will be absolutely no close to an entry signal. You can see on the hourly chart as well, it's going to be another big red candle if this doesn't reverse quickly. 8 minutes until that candle closes and the New York Forex session begins. Been pretty volatile the last 30 minutes or so. Did bounce back from those giant dips there, but now it's come back down again. Not sure what it's going to do. We've got 45 seconds until these inflation numbers come in now for the US dollar. Already saw it come in over forecast in Spain on the euro and in Sweden on the krona. But we should see even more increased volatility at the initial release of the numbers. And look at that spike immediately on the chart. Gigantic. Let's zoom out because that's going to move quick. Yeah, we thought it was volatile last 30 minutes or so. Here's where it really kicks in. 0.4% forecast for the CPI and 0.3% for core CPI. Just seeing manufacturing sales there for Canada, by the way, coming in at negative 1.5 compared to a negative 0.2 forecast. So that's pretty poor for them. Brazilian services volume did come out. You can see that on their month-on-month at 3 o'clock. That was a beat on a negative 0.5 forecast. They got a 1.1, so that's pretty decent. Wow, and these numbers actually coming in a little light there. That is good news for the US dollar there. 0.3% actual CPI month-on-month. Again, compared to that 0.4% forecast, I think they'll be pretty pleased with that. Likewise, core CPI 0.1% against a 0.3% forecast. I certainly think economists will be happy to see this eased. On the chart though, we're still waiting for our signal. If we can get just 1 or 2 green candles like this, that will be enough to get that MACD line over, but we are also seeing the hourly chart come heavily with it as well. So that's going to make some green bars over time. Let's get it up and get it back over. And we can see the spike in volume here, almost touching that price there. Let's zoom in a bit. This volume is almost twice the level, if not at twice the level or more than that, compared to some of these previous volume candles. And just off that one candle alone, we do see, there it is, the MACD above zero. If it doesn't slam back down price, if it stays up there, it will close that way. Yeah, it does push to the green side there. Continuing to see quick ticks on this volume. There we go then, the MACD line does close above the zero, which does mean we can stay on the lookout now for the reverse crossover, getting us into a sell trade. Price has gone on a real run here for gold. Green candle after green candle now. Bit of a bull flag pattern happened there before this second run up, and you can see on the 1 hour chart just how much impact it has had. Since that CPI came out, the price has just been power move and power move. Still volatility and volume in the market, so it might come back down, but right now that MACD line way up in the stars. And it'll also be interesting to see just how much this awesome oscillator on the 1 hour chart pushes towards that zero line. It's going to be quite a bit. I don't think it'll be enough to tip it back across, but it could come close. Yeah, it definitely doesn't push it over the zero line. We can see now, let's zoom in a bit. There it is. It's still a ways to go, but likely could well get there unless price changes its course very soon. Not looking like we're going to get an entry signal. We could get stuck in this here where it crosses over that zero line, the awesome oscillator does, but then we're only allowed in buy trades, so once more we'd have to wait for it to come back down and cross over again. Okay, another on the hour update. Not too much has been happening. Price did take a big drop down and we did start seeing the MACD line head towards the zero, but now that seems like it could just be a retracement as some green candles come some more. You can see the awesome oscillator edging towards that zero line. Still only available for sell trades for us, so if this did come down quick, we would certainly get in on that. But at the moment, no signal. Looking at this chart now, we've just had a big run up over the last 40 minutes or so, in the last candle in particular. Brand new highs well into them. You can see on this hour chart, it really is going. It's going to push that awesome oscillator above zero again when we turn 6 o'clock in 20 minutes. And that's going to put us very far away from an entry signal. So we are going to wait until 6 o'clock just to see if that confirmation happens. If it does go above there, then we're going to finish the session there. And that is exactly what happens. A big reading showing now for the awesome oscillator. So it is going to be buy trades only for quite a while, which means it is going to take a long time for this to come down and back up. This is probably just a consolidation of a bigger bull run still. So that will be it for the session. Pretty disappointing in the sense that we were playing ping pong from where our 1 hour chart was compared to our 5 minute chart. Our 5 minute chart would drag the trend in, and then the 1 hour chart would be too far behind it. Both of these would have been probably quite nice. That downtrend there went for about 80 pips or so before the inflation numbers came in very clearly here. And if you were in, even if you were in here, it would have been definitely taking that up there, 93 pips. Unfortunately, the awesome oscillator did keep us out of those, but in general, nothing gained, nothing lost at least. That's it then. We'll hope for a trade or two in tomorrow's session. Nothing to review in the journal as there's no trades and this is day one, so that'll be it.